What if I told you a single deal could reshape the financial map of Africa? This is Kenya News Update today. Coming up, you'll discover how a 66% takeover is creating a banking giant and what it means for 60 million customers. Meet NCBI Group, a titan in East Africa. 122 branches, over 60 million customers, and now a target. But here's the twist. This isn't a hostile takeover. It's a strategic merger that could change everything. For 9 years, NCBI has built a digital empire, but something was missing. And then the offer arrived. A seismic shift, but here's what nobody's talking about: the price. The planned acquisition values NCBI at just 1.4 times its book value. That's a bargain for a bank with 665 shillings billion in assets. And here's the part that will blow your mind. Shareholders aren't just getting cash. They're getting a piece of a South African giant. The proposed transaction structure will see NCBI shareholders who participate receive 20% of their consideration in cash, while the remaining 80% will be settled through the issuance of Nedbank ordinary shares. This means Kenyan investors get a direct stake in a Johannesburg-listed bank. It's a financial bridge between Nairobi and Johannesburg. But here's the twist. NCBI will remain listed on the Nairobi Securities Exchange. Its brand stays. Its local decisions stay. Currently, Nedbank only has a representative office in East Africa, so there will be no messy integration of systems. This is a pure expansion play. Nedbank, headquartered in South Africa, is among Africa's largest financial institutions. It has footprints in London, Dubai, and across southern Africa. But East Africa was the missing piece. Kenya's role as a financial center, with robust institutions and a dynamic tech sector, provides the perfect foundation. NCBI's strong market reputation and advanced digital banking services, including dispersing over 1 shillings trillion in digital loans annually, make it the ideal partner. The combined strengths are expected to generate considerable synergies. Nedbank will supercharge NCBI's corporate and investment banking capabilities with its global presence and expertise. Imagine a Kenyan SME getting financing advice from a bank with offices in London and Dubai. That's the new reality. But here's the controversial part. Some say this is African banking coming of age, a pan-African powerhouse. Others worry about control shifting south. Is this a partnership or a quiet takeover? The remaining shares, representing 34% of NCBI, will stay in Kenyan hands, trading on the NSE, but the controlling 66% goes to Nedbank. For 60 million customers across Kenya, Uganda, Tanzania, Rwanda, Ivory Coast, and Ghana, the frontline experience may not change. But the engine behind it just got a major upgrade. The bank has averaged an attractive 19% return on equity since its 2021 financial year. Will Nedbank maintain that performance? That's the billion-shilling question. This deal is consistent with Nedbank's stated strategy to extend its reach beyond Southern Africa, prioritizing high-growth markets. It's a bold bet on East Africa's future. But if this merger unlocks so much value, why was NCBI valued at such a modest multiple? Some analysts are already calling it the deal of the decade. Do you think this merger will make banking better for East Africans, or is it a loss of local control? Drop your take in the comments. Subscribe to Kenya News Update today for more breaking financial news.